Yo, what's going on, boys? Charna here with another video. This is going to be week 5, I believe, if I'm not mistaken. This is the first week of February. Yes, first week of February in 2026. And this week I skipped on every single position that popped up. We had one position that I didn't think was half bad today, and Top Step decided to ban gold because people was literally rinsing on payouts with gold. They banned gold. They banned gold on Apex. They banned gold, I heard, apparently on Alpha Futures. I don't know how true this is, but I'm just finding out about this now. I'm not too happy because I would have passed an account today. But it is what it is. Okay, you're going to have to accept this type of stuff. I've personally been through worse, so whatever. And I see people online that have been, they're requesting payouts, like, $5,000-$6,000 payouts, and they're getting denied. And I think they got to a point where they were just, a lot of people was rinsing payouts on payouts on payouts, and their accounts are so cheap. And, they up their account prices, they ban trading on gold, silver, all that stuff. They initially said you can only trade 5 contracts, 5 mini contracts, or micros contracts, and that's like doable in some scenarios, to risk 1%, to risk 0.5% after you pass like 100% for sure. But then they lowered it down even more to 2 contracts, and it's to the point where it's not even worth trading because you're risking like 0.2%. It's not even worth it, and it's crazy because it just shows how greedy they are realistically. So it sucks. Literally would have passed an account today, but whatever. I still skipped. Still protected my accounts all week long, because there's multiple setups that popped up. I will show you guys my thought process behind these setups. I'm not going to explain them on a very deep level because everything that I put on here, there's some stuff I want to keep private for now, for a future thing that I'm working on. But I will show you guys every single setup. I'll show you guys the gold trade today. And yeah, let's get right into it. I'll just minimize this real quick. Let's start it off. So gold, we'll start off with today, since gold position was today. And this is the most recent one. So let's look at the thought process behind this. Let me remove this here for you guys real quick. So gold standard position. Again, 1 to 4 hit, and Top Step decided to two micro contracts, which is, it's quite literally nothing. And I tried placing a trade even with 2, and it said order denied. And I go on TikTok and I look it up, and some people trying to enter with 1 contract, it's still just order denied. It's horrible. It's crazy. So, and I have 5 accounts with them, so. It's sad to see. So you guys can see I'm currently on checkout page of Lucid Trading. So I'm gonna have to figure something out because I don't know how long it's gonna last. So I'm just gonna, I can still trade NQ and stuff on it. So I guess it's fine. I'm just gonna have to wait it out. It just sucks when literally a trade plays out and they ban gold. But I'm not the only one that's not happy. There's a lot of other people that are in, a lot worse positions than I am. But let's look at this trade. So what do we have here? Well, gold's obviously putting in higher lows, right? We can see that, pretty obvious. Let's go to a 1 hour time frame and understand what price is doing. So gold just had this major correction, right? We know this. Gold had a major correction. We rebalanced a little bit. What's price doing now? Well, no one knows if price is going to rebalance and continue down. We don't know if we're going to rebalance, maybe consolidate, continue up, right? We don't know if we're going to rebalance, maybe bounce here and continue up. No one really knows, right? So we just kind of have to react to what price is showing us. Well, we do have the area of accumulation on the 1 hour time frame down here, right? We kind of have a demand area that price could, potentially react from. We also have this level of liquidity that price is probably going to sweep reacting from that level, which is exactly what we did. So now we have bullish buying pressure coming up. Where's our targets? Well, I don't get too much detail, but there's liquidity here, so we might push for that liquidity. Okay, so let's lower it down a little bit. Let's go to 5 minute first. So while this trade was playing out, one thing that wasn't the best was the consistent like failure to take out highs and the consistent putting in higher lows. And it was kind of making this wedge pattern, which I don't trade patterns, but it's still not the best to see, right? But it also gives you areas of liquidity that we might try to target, right? Area right here, area right here, okay? Right, so you have to look and be like, okay, cool, but if we move to the downside, where are we moving? Well, we have liquidity here, 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 here. All of these levels of liquidity, funny enough, right under all of this, you know, this major liquidity, we have a 1 hour fair value gap right here, right? So we know price wants, it will either take out liquidity or rebalance before moving in its intended direction. So if we come down, we're gonna probably come down to this fair value gap, right? So that was kind of the risk on this trade. And it was also like, well, if this would have swept to this high right here and pulled a liquidity sweep, you know, would have stopped out all those orders, then price would have probably been intended to target this liquidity down here, right? We didn't do that yet, so we still have buy sides sitting right here, you know, that we may potentially want to take. So that's where that trade, you know, came in. It wasn't 100% like, I like this trade because there's still a lot of liquidity down here that no one really knows. You know, we could come down and take this liquidity first and react off this demand and then push up, right? No one really knows, but that's a risk that you have to take. Again, doesn't even matter because I couldn't trade on Top Step, which is absolute bullshit. Realistically, it's so stupid, but whatever. All right, let's go over, let's start Monday. Every single trade you see right here, guys, I skipped, and every single one of them would have been a loss. Besides, literally today, the Top Step decided to pull this. I get this email saying that you can't trade. It's retarded. Anyways, every single one of these was skipped this week. It was a very long week, okay? And today was actually supposed to be NFP, which normally I really wouldn't even trade today. But then NFP got taken away. And yeah, so let's look at NAS. I'm gonna have a lot of stuff drawn on my chart right now, so just don't mind it, okay? Monday. Okay, let's look at this position. So people that I originally learned from, right, was taking a bunch of short positions today, or on this Monday, right? 2 positions to be exact, okay? People were shorting this market right here, and I will tell you guys why this is a stupid idea. So originally, we think that, or a lot of people think that trading on the 5-minute time frame, higher time frames don't matter, right? You know, because they're like, oh, 4-hour candle, you know, here's a 4-hour candle. Within that 4-hour candle, we can get miniature, you know, 5-minute trends within that 4-hour candle, you know, this and that. It's really, that's not really how it works, okay? Higher time frame narrative always plays a bigger role on your 5-minute time frame trend. So let's look at this first position that everyone took. So this is a position I personally skipped out on. I know a lot of people, mostly, well, I don't know about everyone, but I do know a lot of people actually took this position and lost. This one is one of the easiest ones to skip in my opinion. First of all, it's a short on NAS, which I personally hate shorts on NAS. I want them A+, okay? So let's look at what we have here. Short position, break of candle entry, I think is what most people got in on, which would have been right there. Stop loss would have been right above your wick. Where's that? Somewhere right there. Yeah, somewhere around there. 1 to 4, somewhere right around there. Okay, cool. Well, price comes up. What do? Sweeps liquidity, comes back down, and we come up with kind of very low volume, right? If we would have came up with candles like this, okay, and just tap and instant reject, that would have been a lot better compared to this and a bunch of upper and lower wicks coming into the zone, right? Of course, you're going to get a rejection from the zone, and that's your entry candle that everyone thinks that's just the entry candle, and then what's it do? Stops you out. What do? Target liquidity. What do? Move up. Like, and then what do? Throw an imbalance right here. Okay, and then what do? Target liquidity. All right, given too much sauce. All right, so let's look on that higher time frame that we're taught not to use. I was taught not to use. Let's look. Is this in the 4-hour or 1 hour? I think it is. Well, I'll do both. Let's start with the 4-hour. Okay, what's NQ doing? NQ's taking out highs over and over and over again, right? All these highs just consistently getting taken out, ran through, okay? We did not take out this high yet, right? So regardless, price is bullish. So price is retracing, right? We know price is, as of this point, before we broke these lows, right? We thought NQ was bullish, right? So where is price probably going to react to? Well, we have a level right here, right? We do have a demand level right here. Do we sweep liquidity? Because price has to sweep liquidity or fill in an imbalance to continue moving. Well, we didn't do that. So right here, we swept liquidity, tapped into an area of accumulation, which is pretty much a demand area right here, where price initially shot off of, set liquidity right in front of it. So what do? On the 4-hour time frame, tapped right into it, rejected straight off of it with a bunch of bullish momentum. You can see that bullish candle was already there forming before that short position was even there. It's not like we were shorting into the demand zone, okay? We were shorting as we were actively pushing off this demand zone. And we know we can sit here and say, hey, this push, where are we gonna react from? Well, right here, there's a 4-hour fair value gap. Now on the 1 hour, it's a lot smaller. It's more, up. But we have liquidity here, liquidity up here that we're probably gonna target, right? I don't think we actually took that quite out now. So it's mainly this liquidity. We still have equal highs right here. But regardless, we know price is going to push up. So why on the 5-minute time frame would you be taking short positions? That's the stupidest thing you can be doing. So of course they all get ran through, and then they get ran through and they're like, oh, 5-minute time frame, this is still bearish. We're going to still be taking shorts. What happens? It gets ran through again. I think there's another short position right here. Yeah, now I will admit this one isn't as bad, but it's still absolutely horrible, right? The reason I like it is because I love this level of accumulation right before that zone, right? I love these build-ups of orders right above these. But still, what even is that rejection? Plus, a lot of people was just doing stuff retarded in the space. This is your initial entry candle, technically rule-based speaking, okay? And then you get all of this accumulation. Price obviously isn't rejecting this level. And you get one candle into it and people enter on this flip or on this candle close. And what do you expect to happen? Well, if price is trending how it is right now, we're probably going to get a little retracement, which is what happened. Where do we get that retracement? An imbalance. And then boom, right to your stop loss. I don't know why people would take that position. But yeah, that's how I skip those two positions. And yeah, I'm putting a lot of information out there, so I really hope you guys pick up on this, because I'm not going to do this forever. But stuff I'm teaching is kind of like you can look at a chart and figure it out yourself as well. So let's look at GJ shorts and GJ longs that happened on the same exact day. These, I didn't trade really GJ all week because JPY, something with the government's like pretty much under intervention, or what's it called? I can't think of the exact name, but pretty much the government just kind of like shut down right now. So there's really no news and data points being given right now, and it's just very unpredictable. So I'm personally not really trading it. But in case you're wondering, here's these two positions, okay? And like, who knows? These two positions could have won if the government was open. I don't know, I don't really know. This is really the main reason. There's not too much technical analysis to go over on these, but I know a lot of people took losses on JPY this week, and it's purely because I think the government was closed. That's my opinion. But yeah, let's look what we have on a higher time frame here. So higher time frame narrative. Gosh, where are we here? Monday. Okay, right here. Price bullish, right? Price bullish. We just swept liquidity on a higher time frame. Just swept it. Now we're bullish. Why would you be taking shorts in this environment right now? When higher time frame just swept liquidity and we're bullish. Why would you be taking shorts? I don't know. Shorts right here. Obviously, they get rejected, ran through. Okay. And this position, again, wasn't as bad, but I mean, realistically, it's just all comes down to we were targeting lower liquidity than this level right here, right? This liquidity didn't really have much of a impact, as you can see, as this level did, where we swept and ran through it. Whereas this level did. So we swept and ran to the buy side. So that was pretty much that. The main reason is because the government was shut down. I'm not gonna lie to you guys. UJ is a very good pair. Actually, I don't even think there was any trades in UJ. Maybe one, but it lost too. I don't have that one written down, I don't think. But yeah, that's really the main reason, honestly. NAS is kind of all manipulation-wise. JPY pairs was all fundamentals because the government's kind of shut down right now. It's very unpredictable, but also a little bit of technicals like involved in it, as I showed you guys. So oil longs is their next trade. There must have been 2 longs and they both got stopped out. I don't know why I have 2 R's. Dang, there were 6 trades on Monday that I skipped. 6 losses. I have a feeling that that's not supposed to be 2. I have a feeling that we only had 1 oil trade, but let's check it out here. So oil. Let me delete this because I'm looking dropping too much sauce if I do that. Alright. That's Tuesday, actually, I lied. Monday longs right here. Okay. A lot of people in the space took this trade. My personal thought process is, why would you be trading this? If you guys can successfully tell me the trend in this, I'll personally give one of you guys 10 bands right now. Someone can tell me the trend. Okay, comment what you think the trend is right here, because to me it looks like a barcode. Okay, no one knows what price is doing right now. So why would you be trading it realistically? The setup popped up and I was like, well, this is pretty obvious. I don't know where price is going. I don't know where price wants to go right now. It could go either way. I'm just not going to trade it. So then people enter longs because I actually don't really know why, and then they get surprised when they get stopped out. Alright? This has no really impact. If it's reacting from this, it's reacting pretty much just from an order block. Alright? This has no impact. Real liquidity is sitting under this low. What do? Sweep it. It's... I don't know. It's really just trading sideways movement. Like, what even is this? Right? That's what you get for trading chop. Sometimes you can be right, and those times you are right, you're going to be like, okay, cool, it's cool to like always trade sideways movement. Right? It's not realistically. You realize a lot more trades actually lose than they win, and that takes a toll on your psychology side. So yeah, that's just how I skipped that one. That one's pretty simple. Just consolidation. It just straight up stopped you out. So that was that trade. And I have 2 positions written down. I don't think actually 2 positions was here because I don't see another position. So I think I was just tweaking. Let me just fix that. All right, Tuesday, more oil shorts. It was taken, right? This one wasn't horribly bad. And this one, I'm not gonna lie, I don't think I can get into too much detail because the concepts that are here, I don't really want to put on YouTube for free because it's very deep concepts, and I know people will try to take them and teach their students, so I'm not even bothering. But short position right here, you know, kind of low volume. You guys can see right here, standard reaction, and then price just faded up to the upside. But yeah, I'm not gonna go into too much context here, but this was another one I kind of easily skipped. All of these are gonna be in a private group in the future in so much detail that you guys will 100% understand how to skip these trades. But I don't really want to go over that right now. But it was yeah, standard oil short. Liquidity was a little bit far away, but it was still kind of valid. But I know a lot of people took that position as well, and that one lost as well. So yeah, that was that trade. And let's go to Germany 30. So I can't go into too much detail with this one either because it's very, very deep. Let's delete some of these. All right. So I recorded a video before, like while this trade was giving the entry candle, and I pinpointed exactly where it was going to go to based off my technical analysis. And it was originally for a YouTube video, and I was like, I'm not gonna post that because, again, it's very useful stuff that it takes time to learn. So I'm kind of keeping it on my own for, again, a private thing I'm working on. But this is like the third time that I made a video, recorded while price was giving our entry candle, and I was like, it's gonna lose and go to this exact position because of this, and then from this position, it could either go here, could either go here, you know, and I called it to a T. So that's pretty cool, but let's look what we have here. It's mainly, if we're going to the very, very simple side of things, it's mainly that this liquidity didn't have a big enough impact to actually have a lot of orders under these two lows to actually drive price to a higher high, because there was a very strong level of something right here, right? There's a very strong level of, you know, maybe resistance or something right here that we needed to sweep a big level of liquidity to actually push through that. And this level of liquidity just wasn't quite strong enough. So that is the very, very, very simple term of it. There's a lot more that goes into it, but that was pretty much it, right? I expected price to trade to these lower levels, maybe fill in an imbalance or take a stronger level of liquidity. That was it. So yeah, that's that trade. That's how I skipped that trade. Entry would have been right here on this A. Actually, there was a candle flip, which I know a lot of people got that flip. Or if you waited for the candle close, it would have been right there, and they both lost. So this is currently Tuesday. What? I thought that was Wednesday. Oh, wow. All right, so by Tuesday, we had 4, 5, 6, 7 positions. 7 positions that I personally skipped. It's crazy because old me literally would have been taking every single position and trying to catch a trade. It's crazy. It's literally crazy. It's the amount I'm improving, actually focusing on myself and not listening to other people's like rules or anything like that, it's truly insane. I've noticed that the last like month or two. So Germany 30 gold 5-minute longs. A lot of people took this position too. I don't really want to go. What is that? Is that one? Okay, let's delete that. All right, let's look here. This is just right here's your level of liquidity that everyone saw. Standard long. This is pretty much a stop raid, you could call it, where we just wicked above to stop every single buy stop out that's on that buy side. It may indicate that we're just stopping out buy side orders so we can target lower liquidity, and hence why it dropped down and took everything out here to the left. That is the most simplest. That's all I'm giving you guys, but that is why I skipped that position. And this was a standard long. Right here, candle close. Right? It was like, oh, we're trending highs. We just took these highs right here. Nice level of liquidity. Now we're going to target up here, and what's it do? Actually, it completely flipped. Wow. But, yeah, price then targeted to the downside and took out pretty much every single level here to the left. Took out these major lows, and then we got a reaction and, you know, went back to equilibrium. So that's pretty much it for that position. And at this time, it was, yeah, Wednesday. Another position. I did not trade pretty much all week. I would have taken a gold position today, but Top Step decided to be retarded, so whatever. But still, regardless, if today actually was NFP, I probably wouldn't have taken gold. I'm not going to lie to you guys. If there was still NFP, I don't care how gold looked, I probably would have not have taken it. Normally NFP, I just don't really trade at all the entire day. But just because there's no NFP and there wasn't news until 10 a.m., then earlier London session, there could potentially be trades that you could capitalize on. That was today. But that is literally it. That is literally it. There was Thursday, which was yesterday. There was no positions. Very, very slow day. There was no positions at all. I don't even think anything popped up. Very slow day. And then today we just had gold. So let's look at what we're working with here. I guess I already showed you guys, but yeah, here's live markets. Really no more setups, I don't think, looking up on gold. Potentially maybe this setup right here. Did we just take that high? Yeah, we did. Maybe setup right here, but price could just run through it. Target lower liquidity here. You know, we don't know. But NASDAQ, nothing. We're just really overextended right now. You know, all this is just manipulation to this left side liquidity. That's really all it is. So within right here, we're just going to be probably filling in imbalances. There's really no demand zones here or anything like that. So NAS is pretty much not going to have any trades today either. NAS has been very slow actually for January. We had like one trade on NAS that I can't even remember if I took or not. And that was it. So I noticed this in backtesting. That is why you get backtesting data, to help you understand how, you know, markets kind of work, right? I always notice NQ, I'm not gonna lie, in January doesn't give you a lot of trades, and I don't know why that is. I don't know if it's because we're just kind of adjusting for the new year, and maybe like it's less volatile, maybe we're less risk on. I don't know what it is. I really can't explain it to you guys, but I do know January we have a lot less trades, it seems like, on NQ, and then market sentiment starts flowing in, and things just start, you know, to play out for the year. And it's just like after that January, that first month of just like a bunch of randomness and trying to figure out where we're going to go for the year, it's like then we start to get into like a flow, right? And then it's when it's like you get a bunch of positions, I notice. So that's just me. Gold, I never really noticed that, I'm not gonna lie. Gold's just throwing trades randomly, and then in a month it'll be slow, and then a month it'll be a bunch of trades. Gold has been very interesting. Gold has, and I'm not lying to you, I don't know what it is, but a lot of people have been eating on gold, and it's interesting because it was never like this before, and I think it's because, well, there's a reason why, okay? And again, I don't want to say it on here because it's a very deep topic, and it's a very deep topic that I'm still understanding, and I put a lot of work into understanding it. But there's a reason why these markets actually, especially these metals, stuff like oil, get more tradable almost year over year over year. There's something that's increasing there, but I'll keep that kind of private for now. But if you guys look into it, you guys will understand exactly what I'm talking about. And a lot of these people are just milking the game with gold. A lot of people like full porting evaluations, and it's like, I get it, I really do get it, I'm not gonna lie, I get why they're doing it, but I also get why Top Step is absolutely losing money. You know, they're getting cooked. So, you know, all these people are requesting so many payouts, their accounts are only $90. You can get $50,000 in funding with $90. It's, you know, the world we live in, it's very, there's so much opportunity that traders didn't have 10 years ago. Traders 10 years ago had to go work a job, save up all of their money, put it into a broker account, and try not to lose their fucking money while also learning. Where we can just pay $90 and get thousands of dollars in payouts without even thinking it's like that good. I think a lot of people don't realize just only a couple years ago, we didn't really even have that many prop firms. Prop firms weren't really that big 5 years ago. So we're in a very lucky position that we can even do what we can do, right? So like when things like today happen where cool, nice trade popped up, but you wasn't able to take it, you have to sit there and be like, cool, you know, it sucks, yes, but like just at the same time be thankful, because 5-6 years ago we didn't really have prop firms to even trade on. Okay, so to be sitting here complaining that, you know, you paid $90 for an account and you can't trade your $50,000 on it, you know, because they paused trading, it's just, I don't know. To me, it's just like, whatever. They didn't have that, traders didn't have this 10 years ago. You know, we're in a lot better position to really complain about this realistically, okay? People are losing their hard-earned money, you know, and you still lose money paying prop firm accounts, but it's not the same. So for me, whatever. Hopefully they raise this soon. Again, it's getting updated every day. This was 5 micro contracts, and it was like, okay, that's tradable, especially Express, right? That's tradable because I can risk, once you're past, I'm gonna personally be risking 0.5 to 0.75%, just under 1%, and that's fine. But to risk a full 1%, that 5 contracts was kind of a little bit too small, on some trades, because again, we trade on depending on like stop loss size, so it kind of differs every trade. But I noticed like, okay, for the most part, it's kind of fine. Maybe you get a little bit less. Maybe you're risking like 0.8%, 0.9%, but it was mostly fine. And then once they did this, it was like, wow, they really just cooked everything. Because when you have a stop loss super, super small and you're risking 2 contracts, it's absolutely nothing. It's genuinely nothing. Or not super small, super big stop loss, and you're risking 2 contracts, it's nothing. It's literally nothing. So yeah, hopefully they raise that. I'm gonna check out some other prop firms. I'm looking at Lucid Trading right now. So I know eventually they'll raise this, and I can still trade NQ on this again, but it is what it is. I keep getting edged with passing accounts, but constantly, but whatever. So that is pretty much it for this one, boys. Let me make this bigger again. That is the end of February, or not the end of February, first week of February. Didn't take a single trade this week. Still green on futures, of course. Gold and NQ, which is performing really, really good for us right now. Except, there's going to be a halt on gold. So, I can just wait on Top Step, or I can just, no one knows how long this is going to last. And with Top Step being very, very weird with, I hear a lot of stories on they're about to get payouts and they get denied. Personally, I've never had an issue. And I see other people that get consistent payouts with them and don't have an issue, and then other people just nonstop have issues. So I don't really know. But for now, I don't know how long this ban's going to last, so I guess I'm going to have to just buy some more accounts on a different firm and just wait it out, right? If they lift the ban, then cool, I'll just be trading on 2 different firms, whatever, right? But yeah, that's pretty much it, guys. I really didn't want to go into too much detail with a lot of these technical analysis and stuff like this, because people trading liquidity supply and demand really think it's just liquidity supply and demand and don't understand on a deeper level. No one teaches it on a deeper level, and that's what I'm working on right now. So I don't want to really give all of this information that took hours and hours and hours and hours and hours to get and put it out there for free, because I did that with something else before, and I learned my lesson that people just use you and use it for their advantage. So I'm not doing that anymore, but I appreciate you guys for watching. And yeah, that's pretty much it. So I'll see you guys in the next one. Peace.